And I'm gonna be high.
Good on you, Donald. I'm the Rocket Man, yeah.
I'm a rocket man. And I'm gonna be
Rocket Man. I'm a rocket man. I wanna go to the moon.
It's great to be here, man. Thank you for having me on the show.
All right, and you're calling in from New York City. Like, what part of New York?
Yeah, I like to say that we're in Chelsea, but it's probably a little more honest to say that I live in Penn Station. We're like right outside of the station, but it's great, man. I love it here. I love New York.
Okay, awesome. And then, have you lived in New York like your whole life, or where did you grow up? And then, did you move to New York?
Yeah, I actually grew up outside of the city in New Jersey. We moved around a little bit, but like all roughly around the Rutgers area until I was in like just as I was finishing middle school, we moved to Virginia outside of DC,
Oh,
and
cool.
that's actually where my uh, who's now my co-founder, Sean Bowe, is my high school best friend, and so we hit it off like freshman year of high school, became incredibly close, got into all sorts of trouble back in the day. He was always the sort of like good influence on me, and I was
Yeah.
you know the other one, but it was a good dynamic between the two of us, and then like I didn't put a lot of thought into what I wanted to do when I was younger, and I kind of just wound it up finding law school because there's a lot of pressure from parents, and it's just like a generic thing to do if you're like, I'm good at taking tests, I don't
Doctor,
really have any
lawyer.
particular ambitions, yeah,
Yeah.
so I went to law school here in New York, and it was just amazing being in New York. Like I loved it so much. But and law school itself was like intellectually really stimulating, met some cool people. But the job of being a corporate lawyer was just not for me. I was not cut out for that. And I figured that out pretty quickly. And so I did maybe like a year and change at the firm before I quit and started this company with Sean, who, like I said, is my high school best friend. And we did not know what we were doing. Like
Yeah.
we were literally coming up with ideas for like 2 years, year and a half, 2 years. But we started to really explore the transportation space a lot, just because one of the early ideas was in that space. And so we started meeting people who
Hmm.
worked in and around transportation technology. And we eventually coalesced around this idea that freight transportation is going through this period of digitization. Like it's changing. It looks a lot different today than it did a few years ago, and it's probably going to look really different in 5 years. But most of that innovation is happening on either like trying to disintermediate the freight brokers, right? So like the Convoys and Uber Freights of the world,
Yeah.
or on building like software solutions for carriers. But
Yeah.
two areas that seemed sort of untouched or relatively untouched at the time was a solution to make it really easy to move money between carriers, brokers, and shippers. So what we think of as like a payments network for the industry, and software to enable freight brokers to compete with the Uber Freights and Convoys of the world.
Yeah.
And we had this idea that like maybe we can solve both of those things at once, right? Like we can build a really good payment solution for freight brokers to help them compete with these like venture-backed competitors and use that as a launching pad to build this bigger payments network and eventually start servicing carriers and one day shippers as well.
Cool.
And that was like mid 2019. And then, the rest is history. It's been off to the races ever since.
I have interviewed a few founders that started in 2019 or 2020, and it's like, what a crazy time to start a business. I started
What a
rocket shipping in
crazy time.
2020.
Yeah.
It's just a crazy time to start a business. But I'm going to back up a little bit. You said you were in Virginia. How long were you there?
I was there. So I was in Chantilly, like outside of DC for all of high school.
Okay, so
And
that's where
then
that's your stomping grounds.
I went to college at James Madison, also in Virginia. So I was there like 7, 8 years.
Yeah, I was going to say that before the show started, I had said I'd never been to New York City, and I had never been to DC either, except for 2 weeks ago. I actually flew into DC for a day and a half, but I didn't realize that I would actually be in Virginia and Maryland and not in DC. 'Cause I put in my hotel address; it was like a mile from the airport, and I was going to Maryland. And then when I
Yeah,
drove, I was in Virginia. I couldn't figure any of it out. It's a weird world for a Midwest guy. But
like
I
man,
will take you up on the offer.
DC's
To get
great,
to
but you got to make a trip to New York. You're
New
you're
York
missing
first.
out.
Okay. I'll make a trip. I will, just to see B, and talk FinTech. But okay, so back on You have a co-founder. Are you the technical founder? Are either of you technical? Like you were a lawyer, so maybe you
Yeah.
don't code, but
Yeah, I am not the technical co-founder. He is. He's been he's a self-taught engineer. He worked at a bunch of different fintech startups after college. And I mean, this is like he lives and breathes this stuff, right? Like
yeah,
he's one of those guys that was like thinking about interesting way to architect solutions, goes really, really deep on all the new technology, which is really convenient because like I said, I don't know how to code.
yeah.
But it's a good dynamic between the two of us.
That's awesome. So your main role, you started it. How do you go about starting? Well, you said you spun the wheels for a couple of years, right? You didn't have like the
Yeah,
Denim today was not what you built in 2019. But when did
yeah,
you decide, hey, and once you decided, so when did you decide, hey, fintech is, would you guys describe yourselves as fintech? I think maybe that,
yeah,
yeah,
definitely.
just to make sure you fit that. So fintech is what you're going to do, and you're going to figure out a way to do a payments network for the broker, carrier, and shipper, right? That triangle of cash flow,
Yeah,
which really I always pontificate that that's like successful brokers and non-successful brokers. If you have sales and marketing figured out, then all it is a financial arbitrage of, can you get paid by your customer before you have to pay the carrier, or can you find a way
right,
to float the money affordably,
right.
and whether that's at a $5 million brokerage or at a $100 million brokerage, they still, those two types of companies have the same problem. And then the JB Hunts of the world and Knight Swifts do not have that problem. They can self-finance whatever they want. And it's a huge advantage for them. It's the
Right,
biggest
exactly.
advantage. So, and then you've got most of the enterprise shippers, and I'm going to go into a lot of detail here, but most of the enterprise shippers that all these brokers want to pay on 60 or 90 or 120-day terms.
It's crazy.
It's
Yeah, it's like
inaccessible.
you do the work, you get paid like halfway through the year.
Yeah. And every carrier I've ever met wants to be paid tomorrow if it's a possibility. So,
Exactly. And like that, part of what kind of pulled us into this market is when we were researching the space, all of the smaller brokers we were talking to, all were telling kind of the same story. They're like, hey, I've worked at many different brokerages before this, and we always used to just pay the carriers whenever the shippers paid us, because the shippers paid us in
yeah.
30 days. Carrier took their payment on day 28. It was sort of like a non-issue. And things are changing now because Uber and Convoy are going around and offering next day payments, quick pay, and everybody seems to love it. But it's like,
Changed it.
from their perspective, they're like, those guys are cheating, like they have all this venture capital to subsidize that. And obviously as a venture-backed company, I don't consider that cheating. It's a different strategy. It's a different game you're playing. But I
Yeah.
can understand how, from the position of these small brokers, it's like you're kind of shit out of luck, right? You just like don't have access to that capital. What are you going to do? And that's kind of like the impetus for it was like, oh, there's an opportunity here to like help them solve that gap.
Yep.
We can get our foot in the door, and then there's all of these interesting workflows that are adjacent to that are really time consuming and error prone, and that uh, you know most brokers don't give a fuck about, right? Because like they're in this industry because they love sales, they love
Yeah,
logistics, they want to
service
take
and
care of their
sales. That's what they
clients.
do. They
They
don't.
don't they don't care at all about invoicing and like book reconciliation, right? That's
Yeah.
that's the stuff they have to do, but they don't want to be spending their time doing it. So if we can take that stuff off their plate, we can empower them to do what they do best.
Yeah, and I think that another part of it is the brokers, like the Uber Freights and the Convoys. I would say that was like a Convoy. I don't know if they exist again today under Flexport or not, but the platform. But the idea was that they were paying quickly. The quick pay thing became a thing, and then companies figured out that you could get the carrier to absorb that 3% quick pay
Right.
fee. And then it's like, okay, that's a great way for a small broker to have an advantage now instead of a disadvantage. It's like, I can actually make a cash flow off that. But you don't, like, if I just posted that on LinkedIn, the amount of comments I get about like brokers taking advantage of carriers and the quick pay fees and all of that, like that's a whole nother ball game. And there's a lot of opinion about all the carrier, if they're needing to be paid in one and quick pay, then they're, not getting, they need that for the fuel for that trip. That's a lot of the industry though. People look down on it and they say, hey, that's taking advantage. I'm like, well, I don't know how many truckload carriers there are out there. I know how many brokerages, but there's a lot of 5 trucks or less fleets out there that want to be paid. And if they can be paid quicker, would choose it. So Uber knew that and it's not cheating. They had a great idea, raise a ton of money
Yeah.
and pay the carriers fast. And that's the main advantage they had. Now the technology piece, of course, is debatable, whether Convoy's tech and Uber Freight's tech was a huge advantage or was just flashy, but the payments is what it was.
Yeah, I mean, look, I've heard great things about the software actually that they've developed. I don't know it personally, so I can't speak into it, but I've heard good things. But I think you hit the nail on the head with this. Like the value of the money thing, like the time value of money is a real thing, right? And thousands of years ago, there was a lot of social stigma around lending money and charging interest, and the economy didn't
Yeah.
grow because of that, right? Like we were in sort of a place of stasis. And obviously, a lot of different things have changed that have allowed us to develop the world that we live in today, where the economy is like growing year over year. But one of those really important innovations was this idea of being able to lend money to someone when you have excess cash and they need it and can do something productive with it
Yep.
to then like make you whole for that risk you're taking, and also that they're better off. It's a win-win situation. And what we're doing is basically putting a lot more people in win-win situations. We are enabling these brokers to be able to service that shipper on whatever terms the shipper is comfortable with. So the shipper gets that freight move. The broker is able to like actually make that profit. They are able to provide the quick pay to the carrier, so the carrier is able to move the load and cover whatever cost they have up front. And all three of them are making profit, right? And to liquidate those transactions, you need or to lubricate those transactions, right? You need the money to be flowing
Yeah.
quickly, which means not just like advancing it, but it needs to not get stuck up at random places because some paperwork is missing, or like the document got faxed to the wrong place. Like you want to digitize all of that. You
Yep.
don't want the movement of data to ever be what's slowing down the freight from moving, right? And that's
Exactly.
that's what we do is we make sure that like whatever other things are clogging up the supply chain, we don't want it to be because the data is getting stuck, because the payments are getting stuck, right? We can take care of that. And hopefully you all can take care of all the really hard stuff.
I think that one, I'm going to bounce topics here, but one of the things that I like to talk about with our CFO, his name's Kyle. We talk about like the difference between, let's say I have to pay a carrier $100,000 in a month, right, for invoices, and then my customer is going to pay me $120,000, and the difference between getting that 120 before you have to pay the 100, or how long you have to
Yeah.
float that 100, is actually the arbitrage of a successful brokerage if all you had was a brokerage, right? If you don't have technology and integrations and customer service, if you just had to do arbitrage of money, and that's kind of fun to talk with you about it because that's your whole business, is like you see all of that. And then you have funding to be able to, and you have to go re-raise and you have to be able to put all that together. And I wanted to ask, what I'm kind of trying to get to is that's a lot for Denim, right? To have a snapshot of. You have all the data, but you started in 2019. By the time it was
Yeah.
FinTech in transportation, what was that, 2021 probably?
No, so we actually like we quit our jobs back in 2017. So it was in
Okay.
2019 when we it was like mid
Okay,
end of
so
2019 when we
2019,
landed on yeah.
which is crazy because 2019 was a bit of a down year for some of the LTL carriers, but it was like a boom time still. Like things were great for
Yeah.
brokers.
29, 2020,
And then
fantastic.
it was all of a
Yeah.
sudden gone. And then you were there for the 2021 to 2022 to almost 23, the boom. Every broker just needed to be able to pay people because they had all the freight they wanted to move. And then you've also seen the other side of that, which is now, Convoy goes bankrupt, or maybe they didn't. I don't know exactly what happened there, but a bunch of carriers didn't get paid. And like it just
Right.
completely had this, and I don't know if you want to get into details, but I was on that side of it. I was running a truckload brokerage, and I had carriers come to me saying I need to be paid. We would have credit with a carrier of 500 grand. And then the next day they're like, you now only have 100 grand. And it's like, well,
Oh
nothing
man.
changed in our business, and we were self-financing
Yeah.
it. The only thing that changed is their factor that they used for their carrier. The carrier was using a factor. They were like, "Oh, we have to downsize risk." So walk me through how you do risk management, and like you're balancing three things. This is going to be tough questions, but I think you can handle them.
Yeah.
Three
Yeah.
questions: your risk management to be able to go raise money to be able to advance money to the carriers, your risk management to be able to say, is this shipper creditworthy? Can I extend 120-day terms? Even though the broker is saying, yeah, it's ABC Supply or whatever the big company is, like, how do you do risk management on credit limits with your banking partners? And then how do you, as a CEO, guide the company into good decisions and not end up upside down? Because your arbitrage is money.
Yeah. Those are great questions. Um, The first two are somewhat related, and maybe I'll start with the second one, which is like how do we make these decisions on which debtors to work with?
Yeah.
And I mean the short answer is we look at a lot of data. You know, we pull in a lot of data. We have developed our own internal risk model that helps us evaluate risk on like a portfolio basis instead of at like a debtor by debtor level. We've we've automated a lot of things that are normally like time sucks for a risk management team so that our risk team can actually focus a lot more on like the risk decisioning, the part where human judgment is valuable. And so all of that helps us make just smarter decisions, right? About whether we want to buy invoices from this debtor, this client, or like this particular invoice, whatever. I will say one of the hardest parts about it is that clients will come to you with like a debtor that you really shouldn't be extending credit to, right? And it's not in their interest or our interest to do it because,
Yeah.
it's a recourse product, right? So if they're taking a bunch of bad invoices, like they're ultimately going to lose money there. And as an individual broker, they don't have visibility into that data for the most part, right? Like you
Yeah.
guys just don't. It doesn't make sense for you to
You get
pay
an
for access
Experian
to all of this
report
data
or
or to like
yeah, but
to develop all these models. And so we're looking at all of that and we can tell you like, look, this is a bad idea. And most of our clients, they get the nature of the partnership and they're like, all right, well, like we don't want to lose much money, so we're not going to take it. Um,
it's hard to convince
but
somebody to
others,
not take risk
yeah,
when
others
they're
it's
risk
tough, right? Because it's like
tolerant.
there's money to be made, right? And that's always a tough conversation is like, look, if it's in our best interest to just take it, because like we make money on every load. And so like we could just take it. But then, we know that you're going to end up losing a bunch of money on that, right? And it's actually in our ultimate best interest to make sure that you are healthy and growing so that we can have a really long and profitable relationship.
Yeah, because you
So
want to
that's
keep
definitely a
customers
difficult
long
dynamic.
term.
Right, exactly. We want them to rave about us. We want them to be introducing us to their friends, right? What we don't want them to say is like, "Oh, I worked with Denim and they let me buy a bunch of shitty invoices and now I'm bankrupt," So like it's a tough position to be in, but I would say that for most of our clients we're able to like really thread that needle and get to a good place with them. And that is essentially how we answer your first part, which
Yeah,
is
the
like
shipper, the
how do we
debtor
keep
risk.
our loss rates low, right? Is like we work with good clients and we're careful underwriting the debtors, right? And then there's a lot of operational risks that like a lot of times factoring companies will lose money even when even when the like debtor was good for it and the client is like not committing fraud or anything, just because there's just like money gets sent to the wrong place, they can't pull it back, whatever. There's a lot of like random shit that happens that causes factoring companies to lose money. And one of the advantages of digitizing all of our infrastructure is that we've designed it in such a way that those errors are extremely unlikely. And so we just don't take losses due to those things.
Yep.
And so when we go out to raise capital, we have a really compelling narrative, which is like, look, our loss rates are extraordinarily low. Like there are virtually no other factoring companies that are maintaining loss rates like that. And so lenders are like happy to throw us money, right? Because you know, they're always looking for yield. Um, your third question is like, how do we like design the culture or the company
Yeah.
to get there? Um, it's interesting you ask it like that because it presupposes that I am the one driving these intelligent risk decisions, which is definitely not true. So um, we actually we had basically zero losses for like a couple of years, except for in the very beginning when me and Sean were doing the underwriting, we took a bunch of losses. And it's because we were like kind of learning everything on the fly. Like I was reading case law, trying to understand like from first principles what risks are okay, what risks aren't, with
Yeah.
basically no industry expertise or like no ability to pattern match around what has worked for other people in the past. And so we made some stupid mistakes, we lost some money, and then we brought in some really smart risk leaders. And what we found is that we can get to sort of an optimal solution by pairing the like technology with these industry experts rather than us trying to come in as outsiders and design everything,
Judgment
right? So
calls.
we
Yeah.
work with people who like really understand factoring, who really understand freight, and we have our technical team basically digest that information, structure it in a way that is uh, that facilitates it being developed into a software product, and then we go from there.
Hmm.
And so the long answer to that is I would credit our risk team really. And so we have a phenomenal risk leader. We have really incredible portfolio risk managers at the company. Some of them are very experienced, some of them are less so, but all of the people who are with us today are like really impressive, and I'm grateful to have them all here.
So, without giving anything away, every company, especially venture-backed companies that are hyper growth like you guys, like there's always something new coming. But what do you see in the industry as like the next thing that you can solve? And maybe you have a product, maybe you don't, maybe you're just speculating.
Yeah, there's a couple things. One of them is that I'm sure you've seen it, right? But like the the software layer for logistics is evolving so quickly. Like people are
Mhm.
building so many different cool things, and the scope of what's possible is growing, right? Like it's
Yeah.
not that it's getting saturated. It's like there are more opportunities to do cool things because as everything gets digitized, there's more structured data, there's more ways to pipe these things together. So things that are were impossible 4 years ago are possible today, right? And like
Yep.
this new wave of AI tools kind of supercharges that. And so it's not possible for any one company to sit there and like skin the whole cat, right? It doesn't matter if it's us, it doesn't matter if it's Triumph, DAT, like nobody is going to be able to solve all of the problems.
Yeah.
And that opens up some really interesting opportunities for partnership, right? Where getting the right two or three products working together in the right way can create something that's like, greater than the sum of its parts, where you can create a lot of surplus value for the clients that the mutual clients that you and the partner share. So some of the things I'm most excited about is we just announced our partnership with DAT and with Carrier Assure, which I think are both going to be like big
Yeah.
hits for the market, right? So with Carrier Assure, we're going to have Denim verified badges, signaling that a carrier broker is working with us, that they're trustworthy, right? And a similar concept with DAT, where we can basically, um, make it known that this broker has their payments being run through Denim, so
Oh,
they're more trustworthy, so that
that's
even these
huge.
smaller brokers,
That's
yeah, for the
huge.
brokers on the platform, it's a big deal, right? Because now they are credible and they can get loads moved from those carriers, even if they haven't been around for 10 years. And
That's
then for
the
the carriers,
yeah.
it's more volume.
And that's the only like so I will say LTL is where I play mostly. We do some truckload, but LTL is our the name of our game and home delivery really is what we do. But the barrier for entry to truckload is so much lower and that's the one factor that stops most people is that you post a load on DAT and I've been through this with my own MC and authority
Yeah,
and done this. You post a load, the shipper's going to pay you, you got to pay the carrier and it's hard to find a carrier that when you're less than a year in business or even a year in business and maybe your credit rating is B. Like
right,
and it's not because the carrier doesn't want to work with you. It's because they're using a factoring company who's making a risk decision and saying you can't work with any brokers that have this letter grade. And
yeah,
and I think we all know that there are bad payers and then there are people with no credit history. And those are not the same
right,
thing. And when you first start, we were moving freight for Aldi and we were having so much trouble finding refrigerated carriers that would actually work with us because we were not quite a full year in business yet. But we were working with Aldi and they were giving us loads and we were working with big brands. Didn't matter. We would,
yeah,
I wasn't working the DAP boards myself, but I saw the emails come in, can't work with them. And then I'd have to call their factor. And then I would explain that I work with Denim or whatever it might be. And then I could get somewhere basically saying, no, my factor will pay yours. Right. But
right.
it was a really unique challenge that we face. And I think almost all new brokerages face. And so,
It's a bit of a catch-22, right? Because they're
yeah,
like, well, we can't take your loads unless you have proof of payments. You're like, well, I can't make any proof of payments if nobody's going to work with me. You
yeah.
gotta, you gotta
And
kind of
so if
like
you had to,
bootstrap it out of nothing.
so your idea is a partnership with somebody like that, and it's like Denim is we're going to be factoring this load, so we're backing this brokerage, and they're verified. So yeah, you can take the load because we are going to pay you, and that's better
Right.
than getting like a financial document and trying to set up a meeting and an NOA and all of that. That's pretty sweet. I think that one thing I wanted to talk about, and I was kind of going there, is that so the reason that companies do that, if they're hyper growth and they're able to get these enterprise shippers on truckload brokerage, they don't go to a traditional factor. They end up with an ABL line. And then they are
Right.
borrowing off of receivables, but like they'll fund it 100% or 110% of receivable as long as you're growing. Whereas a traditional line is going to be a lot less and then, you're going to pay more interest. But then you sign up an NOA and it's a lockbox and the same type of thing as a factor. What's your take on ABL lines? And is that a different product than what Denim would be offering? Is that a different part of the industry? And how did you decide to end up in fintech this way and not be in banking traditionally?
Yeah. So we've always looked at the financing piece as sort of like the beachhead market. Like it was thing we needed to do to get in the door,
Yeah.
but we definitely don't see that as like the pinnacle of value creation here, right? What's interesting about it is like because we're in there providing that financing, we now have access to all of these different workflows that we are uniquely positioned to solve, right? And what's interesting about factoring as opposed to this ADL is that this allows us to actually like take over more of these workflows for our clients. And so we actually have
Mhm.
a bunch of clients who could get, credit facilities, ADLs at a much lower cost than Denim, right? Because it's a different type of financial product. And if you have that
Yeah.
kind of scale, it can be cheaper. And who choose to work with us instead because they save so much more money in terms of like all of the additional headcount they don't need to hire as they've scaled their business, right? Because if they were to switch to this lower cost of financing, well, then it means like now you need to build a big team internally to do all the stuff that the Denim product was helping you do with a much smaller team. And it's a question of where you want those dollars spent, right? Like I think most people are realizing, I think when you're like 23, you're at school and you're like, oh, I want to manage a huge team. I want 50 people reporting into me. But then you like manage some people and you're like, man, this is pretty tough. You gotta like worry about everyone else's problems. There's just like a lot going on. And I think most people come to the conclusion, I'd rather have a small team of badasses that are reporting to me, where instead of managing 40 people, I'm managing 10 people who are incredible.
Yeah.
And we basically allow them to do that, right? We're giving your team superpowers so that a smaller number of you can do the work of like a much larger team. And you can be really selective about getting the best people and having them focus on the most important things.
Yeah, I think that's we share philosophy there, and it's kind of funny you said it that way because that used to be my whole like I had
Yeah.
an identity with how many employees I could have, and I saw a recent podcast, and there was a company that was like 100 and some million with 100 employees, and I'm like, man, that's what I wanted to do. That was like I
Yeah.
wrote that on the whiteboard, 100 million, 100 employees, and now I'm sitting there like, okay, in a year, maybe less or maybe more, when we get to 100 million, I want to have 25 W2 employees. We have 21 right now. I'm like, I think I can get there.
Yeah.
And it's not just because, and like if I have customers listening to this, like our customer service is always the emphasis. So you would think you have to have a higher body count, but you don't. You have to have better technology and better process and better API integration so that you don't have a whole team built around missed pickups, freight bill audits, and track and trace. And instead, that team
Right.
is built on reporting and exception management for the expedited stuff. But if you think about that philosophy, so is that how you're trying to build Denim as well? Like minimal headcount, but they're just badasses. And then how do you do that? Right. So like I kind of have my answer, but I'll let you answer first and then I'll give my take is like, what metrics are you using to be able to grow revenue without headcount? And what is it product? Is it, just the right type of people? Is it a combination? Is it market fit?
Yeah.
Like what are you going to sell into?
Yeah. So I think it's I think everyone's story is going to be different, right? The
Mhm.
way they built the business. For us, there was definitely a lot of ups and downs. There's a lot of like learning. We literally had no idea what we're doing when we started this company, and there was a lot of learnings we had to have. Where like we scaled too much. We had to bring the team size back down. We invested in areas that we probably didn't need to invest in. We didn't invest in other things that we probably should have invested in.
Yeah.
But eventually, we kind of like I think we figured it out, and we were able to get our team to a scale where like we felt pretty confident that without a lot of net new hires, it's basically just backfilling people as necessary, we would be able to deliver like a really significant amount of growth. And we've essentially done that. So like we've been growing, we grew crazy fast last year. We're continuing to grow, and our headcount has basically stayed roughly the same through all of that. And I think we have a lot of runway to keep growing the business without having to add a lot of heads. And to your question of like how is that possible?
Mhm.
There's a bunch of things. One, which is like it's getting the right people. Like 50 of the right people can do a lot more work than like 200 of the wrong people, right?
Yeah.
And the
But you
the
might have
way
to
we
hire
describe it
350 people to get to the 50.
to get
That's
to
the
the 50,
problem.
right? Yeah, it definitely was a lot of trial and error. But we talk about internally, like no disrespect to the Navy, but we talk about like we want to build the Navy SEALs here, right? Not the Navy. There are other companies that are building the Navy, and that's great. But like this team is going to be the Navy SEALs. We want a small
Yeah.
team of badasses who are each going to be like really high performers. So one part of that is finding people who are like really just intrinsically talented. Another piece of that is making sure that they all vibe with the same culture, right? That we have the same sort of values around being really tenacious, being really curious, prioritizing trustworthiness, right? And if we can get those people that sort of think the same way in those key areas,
Yep.
they're going to like gel really well together. We've started investing more in like training and leveling up our team, right? So a good example of this is my co-founder opened what he called Retool School. So Retool is one of the platforms we use to like develop our front end, and he's basically started having his like engineering and data teams teach our risk and service teams how to manipulate the interfaces that they're working on top of. So these people who have like no technical training are now going in there and essentially like, you know, editing their dashboards in real time
Yeah.
so that the system is like evolving with them as their needs evolve and as they learn new things. Which is like, it's a really cool experience for someone who like maybe didn't have those opportunities growing up and just like never really thought about it. And now they're like becoming technical, but also it's great for the business, right? Because now those people are like much more valuable from a value creation perspective than they were prior to that training. And then the last one is investing a lot in internal automation, right? So we think
Yeah.
about operational scalability, not just as like a cost savings, but as a way of improving the quality. So if you can figure out a way to automate the function, you can not only do it for cheaper and you can do it faster, you can do it at any time of the day. And if you get it to a good place, you can do it error free, right? Whereas like a human's only gonna be able to work certain hours of the day. They're gonna, they have to go to
Yeah.
sleep at some point. They're gonna make mistakes when they're tired. And so the more we can automate these low level tasks, the more like important high judgment tasks that we can give to our team. And I won't say we've nailed it yet, right? There are definitely things where like the team is spending time on things that they feel like is, not the best use of their time, but someone has to do it. But I think that is becoming less and less true over the days.
Yeah. And I think that two learnings from that I've seen on my side is one, if you have fewer people, it's one thing that I've learned is that the more employees you have, the harder it is to maintain urgency at the organization. Like speed is everything for startups and even for larger companies. Like it doesn't matter if you're a startup or a Fortune 500. If you go faster, it's probably better. And
Right.
it's just innate that people like they'll take 8 hours or 4 hours of work and they'll stretch it into 8 and feel productive. And unfortunately, what I've had to do is lower the team size over time on certain departments. Obviously, we've grown as an org, but on certain departments, I've lowered the team size so that there's more work to fit into the 8 hours, and it just by design increases the urgency. And I don't want to make it sound like we're all working 42 hours a day, like 50 hours every 2 days. But if there's more work to be done, then you can't get it done with the team size you have, instead of hiring now, it's automate. And then the
Right.
second learning that I had from that was you said that that's pretty important. We'll have to clip that, Carly, is that you said it wasn't automation. What was it? You said automation, not just to lower cost,
Yeah, not just
but
to
to
reduce
add,
costs, but to make the quality better. Yeah.
yeah, quality. And so like, if I think of customer success, that's the buzzword in tech world, right? It's customer success. What is customer success? Having the system work better than it was working last quarter. And so that the
Right.
customer system that they're on, whether it's a TMS or it's a FinTech platform or it's a dashboard or it's finance, if the
Yeah.
automation makes it easier to use the platform and more sustainable and less mistakes and less errors, then you keep your customers longer. And so I think people, and myself included, I used to say customer success was quarterly business reviews and on sites with warehouses and relationships. And then, you had to have good pricing or whatever if you're a broker. But really it's automation. So it's not just that I want to save money and, if I think that the movement was offshore everything and then you can lower costs for operations. And now I'm like, oh no, it's actually automate everything. My problem, and I want to ask you about this, is I tried to implement AI at Rocket in the past quarter in a lot of
Yeah.
different ways, miss pickup management, billing auditing, a lot of different things. And I just had so many people doing all the tasks that it was impossible to get them to use AI anyways. So I ended up
Yeah.
having to reduce the team size on purpose so that there was too much work for one or two people to do so that they would implement the AI. It's kind of a
Yeah.
crazy concept. How do you view AI in your world and automation, machine learning, all of that, considering your co-founder is technical?
Yeah. This is actually one of the things I'm most excited about at the company. It's probably not as interesting to our clients as like some of the client facing capabilities we're building, right? Like
Yeah.
things to streamline the collections experience or make it easier for them to resolve issues. Because this is like It's like the behind the scenes how the sausage gets made. But he's been working on what we call our AI orchestration layer, which is basically it's infrastructure that allows our business units, so like our head of ops, for example, to manage their workflows using teams of AI agents in
Yeah.
addition to employees, right? So if you think about the analogy of like normally you have a people manager who's managing a bunch of people, and then they're supported by the HR function, which is like not their direct manager, but is kind of supporting them there. We have kind of a similar thing here where our business units have managers managing a team of AI agents that are they're getting support from our engineering department. And we're early in this phase, right? I'm not gonna pretend we have like a
Really
million
cool though.
agents out running around doing everything. But the what's cool is like now that we have that infrastructure layer, we can just like roll out these applications where we now like, all right, we can tinker with this model, we can put this one in place, this can take over this workflow, and the business manager doesn't need to be like an AI engineer or even an engineer at all. They can use this interface to basically manage the agent the same way you'd manage an employee. Like, oh, you didn't do a good job with this. Let's fix the instructions. Let's understand, like when we say
Yeah.
you didn't do a good job, like what exactly did you do wrong? Let's like run a few tests and be like, okay, now you're doing good. Like we'll send you back out there. And unlike you know, it doesn't work for everything, right? Like the really high judgment tasks, this can't touch it. But with this like low level tasks, once you've like trained someone, once you train one of these agents, you don't have to worry about like, oh, now that we've doubled, we need to hire two more of these people and train them all over
Yeah,
again.
that's
You just
exactly
like
right.
roll it out, it's sort of infinitely scalable. So it's I mean, it's one of the things I'm like the most excited about from just like a business perspective, from like the ability it will give us to deliver really high quality, consistent, fast service to our clients at a level that, we've never been able to.
Yeah, and I think that the story to your clients, the way that you could pitch it is that it's going to allow you and your other head of ops and those to leverage their time for the highest leverage tasks and
Exactly.
like
Yeah.
make the product better because I mean, let's face it, every founder, CEO, COO, co-founder, that we spend most of our time doing things that like we don't want to be doing to make the business continue to run. And anytime, like the real energy we all get is like when you have a couple of days in a row where you're like, I can work on something new to make the company better. But if that
Right.
was 80% of your time instead of 20, if I was able to do that, and I'm getting closer because I've got like there's so many good and high level employees now at Rocket that like can do all the things that I used to do. Now Troy and I, our CTO, I'm doing the similar thing with AI agent is like in LTL every day we reschedule pickups with carriers and we call them, right? And AI
Yeah.
voice is allowing
Yeah.
us to be able to call them and say, hey, this was supposed to pick up yesterday. It's under this reference number. Can you make sure it picks up today? And you have to train the AI agent like you would any employee. You have to give them this reference number. And when they say that it was no freight, you have to be able to say, what do you mean no freight? Like there wasn't a pallet or it was the wrong dock door. But you have to train them. But the one thing that I love is when you train an AI agent, and we've been trying it out and like trying to build this out. So we're not there, but we're working on it. But when you
Yeah.
train an AI agent, it never forgets the instructions you gave it. You only have to
Yeah.
tweak it a little bit. Whereas, like, I swear, I actually, instead of saying it about an employee, I'll make it about me. My wife says I forget things all the time. I don't think she ever said them, but
Yeah.
we can't be sure. So she's right. I forget stuff. She's like, you never forget that you have a work meeting, but the social worker's here for the adoption visit and you're not here. That happened today. And I'm like, well, it wasn't on my calendar. So, but an AI agent wouldn't have made that mistake, would have been on time.
Yeah.
So it's not just about, there's one other thing that I
I
didn't
don't
get
know if
to.
that meeting will have gone as well though if the AI agent was there talking to the social worker.
Yeah, true. Yeah, we're doing the greatest job of raising this 2-year-old. I promise. Just writes a novel about parenting to the social worker. But no, I think the other thing you talked about, and it was to make the quality better, but also like the mistake rate or the error rate. You were talking about loss rate, right? What was your term
Yeah.
for like when you lose receivables? What was that term you're talking about?
Yeah. Our loss rate.
Loss rate. Okay, so you're like very low compared to the others, and that's like how you go raise. That's table stakes now would be for mistake rates on when you're building an AI agent or anything that's in AI. The mistakes are so much lower. And so if it's in invoicing, how many times do you accidentally, put the wrong vendor in the payable field. That just won't happen
Yeah.
anymore. And then like that's people don't realize how big of a mess it is when you pay the wrong carrier for the wrong load. Let's say you paid them
Yeah.
$4,000 and then you have to be like, wait, could you give it back? Because I
Could you
have
give
to
us
pay
that
the
money back?
4,000 to
Yeah.
this carrier, and then they don't give it back. They said they're going to send a check, but you got to front the money, and it's at scale that's really messy. So
Yeah.
error rate there has got to be
It's
important for Denim.
for sure. And I think you kind of hit the nail on the head here where it's about what use cases you plug in the AI. Because like if we were to, for example, if we were to like swap out our risk team and we're like, hey, we're this, this robot's going to make the decisions from now on, which invoices we buy and like how much to do all the credit, and we don't need any human oversight.
Yeah,
I can tell you like our loss rates are going to go up like that,
yeah,
right? But if we say like, okay, this specific workflow, like what you mentioned, which is like getting these invoices out or like making sure that we have the right banking information, right?
oh yeah,
And AI is going to be way better at that. It's just like you're looking at all these numbers, it can do so many of them. It's not getting like its eyes aren't glazing over by looking at the same boring information over and over. So let's have the AI do that. And now all that time that the risk managers were spending doing this work that's
pending
better
approvals
suited
and
to
things. Yeah,
software can now sit there and have like the hard decisions. Like they can sit there and think about like how do we restructure this relationship so that we can give the client what they want without taking out a bunch of excess risk? How do
yeah,
we like figure out a creative solution to get through this underwriting bottleneck that makes our lenders happy but also allows the client to continue operating the business the way they want? And like that's the stuff that you want your team of superheroes working on, right? Not reviewing a bunch
yeah.
of
Reviewing, is this
paperwork,
the
right?
right amount? Is there a carrier invoice attached? Is there a BOL? What's
Right.
required? Approve. That's a lot of clicking and it's a lot of verification. And the other thing is too, if I'm going to pivot here quickly, but before that, the other thing about being able to verify all the data and go through that, it's not just mistakes. You also have employee turnover because nobody really
Right.
wants to do those things. And, no matter how great of a culture you build, if you give somebody a job that just sucks all the time and there's no real growth in it, and the only reward that they get for the company growing is more of the job that they, because it's like I've
Yeah.
had this happen where our operations team, I now call them customer service, would be at the Christmas party and I'm like, hey, we grew this much revenue, we got this huge customer coming on, and I could see it in their faces that they were not excited because that
Yeah.
meant, oh my goodness, another customer that means I have to do all these things for. And I've always grappled with, well, that's how everybody gets paid, customers are the most important thing. But in
Right.
fact, I could win their trust over more if I improved their workflows so that if we added
Right.
customers, they got more relationships and got to do the things they like and interact with people, but they didn't have to reschedule another 20 missed pickups every day. So,
Right. And I mean, we're lucky to be like building companies at this time, right?
oh, what
Because,
a gold rush
10
for
years
us.
ago, if someone's complaining about that shit, you can't be like, well, I'll just automate it. Like that's,
Yeah.
like I can't like I'll just automate the bad stuff and you can do the more interesting stuff. Like that wasn't even on the cards. And like, it's not that easy right now.
Yeah.
It's not like every time one of my employees is like, oh, I really don't like doing this thing. I'm like, all right, we'll just automate that and you can do
Just
something else.
talk
Like
to
that's not
Grok.
how it works.
Grok will fix it real
Yeah.
quick, and then
But
Manus
like
will be the new
the
agent.
the fact that it's on, it's like it's in the cards, right? It's stuff that if we can put it into the product roadmap. We can start automating this, and little by little, we can chip
Mhm.
away at these workflows and have you focus on the more interesting things. That's really cool, right? That like the
Yeah.
nature of someone's role can change over the course of a year or 2 years, not because they're like doing a new job, but like it's not because they got moved to a different part of the org, but because like you've taken away parts of the work that was less interesting and given them the stuff that is more based on like good human judgment.
Yeah, and I think that like we're very lucky to be building at this time, but also it's maybe like a year away or maybe not even to where a lot of people will be able to reap that benefit. Right now you have to be fairly
Right.
technical to try to do it. And I can't code. I love APIs and I know how to read Postman and I know endpoints and I know webhooks, but I can't code. And so
Right.
I 2 years ago, I was like, I'm going to learn to code so I can do this with Troy and we can be bros and we can both code. Now I'm like very close to figuring out AI because I'm technical enough, but I don't have to do the coding.
Yeah.
And, I think one of the things, and this is now where I want to pivot to the industry, I think open source is going to be pretty disruptive to logistics. And I think no one's really realized that or talked about it. But TMS building in 3 or 4 years, that there will be an open source model of almost every TMS. And then it's like, well, and Denim side, you integrate with TMSs and there's partnerships, but it will be so
Yeah.
easy to integrate with Denim because it'll be an open source. One person will do it. Open source, you just have to have one person on your team that can code it. And then
Right.
Claude 3 Sonnet or Sonnet 3.7 will code the rest of the open source. Uh,
Yeah, it's going to be really interesting because it's like AI is kind of turbocharging this trend, but it's
yeah.
it's kind of been happening, right? Like the number of TMSs is just like rapidly expanding, right?
Yeah.
And that's like before AI. And how how many clients do we have that have their own TMS? Because like ultimately it's because your business is different and you
Yeah.
want it to have the right bells and whistles for your business. And so as it becomes easier to develop software and as the value, like the potential value creation from software goes up, it makes more and more sense for people to like customize it for smaller and smaller groups of people. And to your point, like AI is just gonna like, it's like rocket fuel for that trend.
Yeah. Because you can take the open source base model and say, hey, I think of companies like Project 44 and Banyan, and I'll try to name a few others, Four Kites, so that I'm not picking on anybody. But their whole like business model was built, and SMC3 was built upon carrier connections to LTL carriers, right? API connections. Connect to us, we're connected to all the carriers. And now I don't know if anybody's done it yet. I'm just pontificating. Somebody should build an open source model with all those API connections. And then you could just bolt
Yeah.
onto it and build your own TM. But then you can use Sonnet and AI and Gemini 2.5 to code most of the infrastructure on top of it. Cause that's just, in React, or like you're just building the front end, and you can get a designer and some AI to code it. But it is really difficult to build API connections into carriers, very difficult. And every single one of
Right.
them is different. And there's 100 of them. But if someone open sources that part, that just there's now it's a marketplace. And the reason I
Hey,
say it
maybe you
is
should
because
do
you
it.
were well, I don't know if anybody's done it yet. I'm gonna call Troy after this. We'll do it.
Yeah.
Uh, but the idea is that you were talking about partnerships, right? And when you were talking about partnering with similar type companies that do different things and ever put the product together, that's what LTL is going to end up as too. There's all these big 3PLs, and then there's all the carriers and TMSs that connect to them. But marketplace is where it's going, where you can use the best freight bill audit tool and the best LTL carrier
Right.
rates and the best TMS. And McLeod and a couple other brands that I won't name because they don't like it when I talk about them, but other TMS brands, they charge so much money for their TMS. Like they used to give it away for free, some of them, and some of them charge $1 million for a package for 5 years. It's going to be free. Every TMS is going to be free eventually, because right now the cost model is based off of cost per shipment to transact with a Project 44 or an API connector. But if that goes away, then the cost of goods is zero.
Right.
And so take me through what you think of the industry with your partnerships that are coming. And then let's go for a little bit longer on finance arbitrage, like a small broker and a big broker. What are the disadvantages and advantages, and how does Denim help them? And a little bit of a commercial for Denim too. So what do you think is
Yeah.
going to change in the industry with consolidation or marketplace?
I have a question for you first. I'm curious when you say all the TMSs are going to go to free, is your take on it that like most of them are going to go most or all of them are going to go bankrupt, or are you thinking they're going to go to free and they're going to monetize in some other way
The
to
savvy
stay
ones will
afloat?
monetize in something other than a transaction fee.
Yeah.
And there are a couple that are built for brokers that like will still exist, right? But I'm talking like shipper platforms and TMSs that are not owned by a 3PL, that are carrier centric, I'll call it. They're going to go to
Right.
zero because there will be so much optionality in the market that any shipper can plug into anything. And like the work integrating into NetSuite is a beast today, but in 2 years, it will just be table
Right.
stakes that every TMS that exists integrates into QuickBooks, Denim, NetSuite, SAP, because it won't even maybe be API integrations anymore. It could be API AI agents connecting systems.
Right.
But
Just talking to each other, trading the
yeah, but
information.
that was the IP, and they monetized, and that I don't know if they'll go to zero, but they won't be able to monetize on a transaction fee or an annual fee to pay for software anymore. That's going away. And it's been a good
Right.
decade run for TMS platforms, and then
Yeah. It'll be
some of
interesting to
them
see
are
how it
funded,
plays out.
some are venture funded. I think those will have the toughest time pivoting. Some are private equity owned. They won't have much trouble pivoting. They'll just find a way to plug into global trans and then monetize reselling LTL rates or something else than the transaction fee, because they've got the software that's still valuable.
Right.
They just won't be able to have some people sign up and pay per transaction.
$1 million for a couple of years.
Yeah, like McLeod, they'll figure it out because they're so established. But anybody who copied that model and is like, hey, it's you've got your 3 tiers, and you've got your beginner junior plan, and it's this much per shipment plus this flat fee per month, that will go away because they'll be able to get the same service from anybody. That's what happened in 3PL world.
It's gonna be interesting to see, man. I'm wary of making any like really confident predictions about how the world is gonna evolve with AI, just because
Yeah.
like every week
Ask
I'm
me
like
next
mind
week.
blown by something, yeah, that happens. Um, and it's sometimes it's like a little overwhelming when I'm just looking at like how quickly things are evolving in different spaces, just trying to like stay on top of all of it. But it's gonna be really exciting. I mean, the world in every way is gonna look so different in 5 years, and logistics is gonna be just like one more example of that, right? Where like the things that people are taking for granted today in terms of how the industry works is just not going to be the case in 5 years. I can't tell you exactly what it will be, but it's unlikely to stay exactly the same, right?
Yeah, I agree with that. So what do you think of like the difference between a broker and maybe, do you guys do much LTL or is it more truckload for factoring?
We initially we were like only truckload. We
Yeah.
now have a bunch of clients that are doing LTL, and some of our biggest clients are LTL. Uh, it's definitely one of the areas that we saw a lot of growth in 2024. So not just that a lot of our new clients were LTL, but a lot of our clients who do both saw a lot of their revenue grow on the LTL side,
Yeah.
which was an interesting trend, right? And I think I see it as kind of related to this other trend where like year 2000, freight brokers took like 5 or 6% of the revenue of the market, right? Like it was almost all going straight to carriers. Today, it's something like 30%. But also, you've had this evolution from like not just like introducing freight brokers, but from like the freight brokers to these 3PLs. And now you've got these 3PLs to like 4PLs, right? And I,
Yeah.
I think it's all part of this trend where people are realizing that it's not enough to just be transactional. You need to
Yeah.
like add more value, and everyone is looking for ways to add more value, whether that's providing the financing arbitrage, right? Like providing you the capital that you need to liquidate your transactions, providing you the warehousing or the ability to do both FTL and LTL freight, right? Like all of that I think of as like being able to provide a more complete package. And so it's less surprising to see that movement to LTL within that broader trend. I'm interested to see where that like continues to go, right? Because I think
Yeah.
all of our really savvy clients are kind of onto it. They're looking for ways to expand the amount of value they're delivering their customers. A lot of them are exploring ways to diversify their revenue streams. Um, yeah, they're getting into 3PL, whatever.
Yeah, I think that part of the LTL trend is that for for as easy as it is to get an MC number, a DOT, wait 30 days, and then figure out finance. And once you've got that, you call customers, you post on DAT, and you cover loads for truckload, and you can have an operating authority. It's just as hard to start an LTL brokerage with no freight, because you can't call
Right,
R&L and say, hey, I'm going to someday have a lot of volume. Give me a national blanket rate I can resell and make it as competitive as Worldwide Express.
right,
It doesn't exist. So like factoring has never been part of LTL because it's been owned entirely by like
right.
10 players. I think there's the big five, obviously, is CH, TQL, even though they're thought of as truckload, they're very big LTL. Priority One, Global Trans, Worldwide Express, Unishippers, maybe Mode.
Yeah,
I guess you could throw in a few others that I I left out. Trinity is close, but they're all in top 25 biggest 3PLs. But it's all 3PL rates. In LTL, there isn't a real like arbitrage of like I'll have a better rate than you with FedEx if I only spend 100 million or if I only spend 100,000 a month. You just can't. But
yeah.
it's consolidating, and the carriers are actually rejecting 3PLs faster than they ever have. And like, I think that the 3PL model for like the established players, they're going to continue to grow like wildfire, but there won't be any new upshoot like startup 3PLs that are at 200 million right now and make it to 2 billion.
Really, you don't think so?
No, not in the 3PL resale model. I think that
Okay,
they'll end up staying in the 100 million to 1 billion range, and then there will be a bunch of them at 5 billion. And the reason is that those 5 or 6 can control pricing, and then everybody else will like
Has
you
to play
think
their
that
game.
yeah, you think that they'd be able to like what's going to happen is they'll be able to get the same type of rates that Worldwide is going to get at $150 million brokerage, but you think, oh, well, then they're going to expand and make it to a billion. No, now there will be a lot of people who will go and get those rates, and it'll spread out. There will be more and more and more options, and they're all, or a lot of them are going to be in the 100 million, but there won't be
Right.
5 behemoths. And LTL is only a $60 billion industry, maybe. And so like there
Right.
isn't, and then
It can't
five,
support the same size of scale as
yeah.
the same
So
type of scale as the FTL.
and that's about LTL carrier revenue. So like some of that is obviously if a 3PL is reporting revenue like a Global Trans or Worldwide Express Group, like that, so is Saya. So I don't know how to decouple that revenue, right? Because they're reselling Saya's revenue. So I don't know how to decouple that, but there's obviously the LTL carrier revenue of the publicly traded plus the privates. It's like 60 billion market cap. So if 5 players are all around 1 to 5 billion, that's most of the market. And then the rest is all small companies. I'm just saying that the small companies can be big, but there won't be another behemoth because everybody will have access to it. I think that companies like Denim are going to be a reason for that because in the past, you couldn't pay LTL carriers don't want to be paid in 30 or 45 days by a small broker.
Yeah, it's not an option.
They want 15-day net. They're gonna mail you the invoices, and you got to pay them 15-day net. They're not even going to do API invoicing, but it's a whole different financial side there. I got 2 more questions. Do you have time? I know we're kind of going over.
Yeah. Let's hit it.
So, who is B? Like, you're 33. You're the CEO and co-founder of a very large, fast-growing, funded company. But like, what do you do like in life besides work?
What do I do, man? I party, I read books, and I run a lot.
Oh,
That's,
you
those three
run.
things take up a lot of my time. I think the best part about living in New York is it's like almost like still being in college. Like so many of my closest friends are all like very close by.
That's
I
cool.
get to
That's
see
cool.
them all the time. I've spent the last like 13 years that I've been here just like nagging the shit out of my friends and family to move them all to New York. And so I've got my brother here, my sister here. I've started moving my cousins here. A bunch of my groomsmen all live in the city. And so like, yeah, we go out on the weekends and it's awesome. Like every time I'm just so grateful to be in this city with these people and like
You're living
very,
your
very
best life
happy
there. That's
with the life I
awesome.
have. And then I love to read. And so I read a lot, like 4 or 5 books
Fiction or
a month.
nonfiction, or do you just mix it all up?
I used to mix it all up. I last year I was on a kick where I just read like a ton of fiction. My sister reads like almost exclusively fiction, and she just like sent me a bunch of recs. This year I'm doing the opposite, so I've just been crushing nonfiction. Um, and maybe I'll start mixing it up again at a later date.
Yeah.
And then I run a lot. I feel like it's very meditative for me. It's good to be outside. Like it just sometimes I mean, you get stressed out, right? You're running a
Yeah.
company and it is just like all kinds of stressful. And you go for a run and it kind of like puts things back in perspective, clears your head. And
That's pretty
yeah,
cool.
I love it.
Yeah, it's awesome. Okay, so now I asked who you are. What is Denim going to be? Like, how is your path an exit and stay at the company? Is your path an exit and start another one? Are you a serial entrepreneur kind of guy? Are you going to IPO someday? Like, what are you going to build Denim into if in a perfect
Yeah.
world?
Yeah. I mean, look, I can't predict the future, but what I know is that we have a market opportunity that is extraordinarily large, right? Like we have the potential to build something that makes it really easy for, you know, hundreds of billions of dollars to flow more easily between brokers, carriers, and shippers. That is the kind of opportunity that can support a standalone, massive public company.
Yeah,
Now, whether or not things get there, right? There's a million things that could go left or right on the way there. But we want to, we want to change the industry. We want to make an impact on how this industry operates, make it easier for all these people to get the information, to get the money they need, so that you guys can do the important work of getting stuff where it needs to go, right? It's one of those, it's like, it sounds cliche, but it's like logistics really is the lifeblood of the economy, right? And if we can help
yeah.
that lifeblood continue to pump through the system more effectively, that's something we'd be really proud of.
Awesome. Okay. And then my last question before the actual last question. This is like completely off the wall, but you were a lawyer. You're from DC. So when are you going to be a senator?
No, not at all.
All right.
It is not in the cards for me. I do not think yeah, I don't think that's in the cards for me. But
I had to ask. I mean, you grew up in
if
the
I change
DC
my mind, I'll
area.
let you
You're a
know.
lawyer. That's the path, man. Oh man. All right. Okay. This is
Hey
my
man,
last
this is
question.
awesome.
This is my
Oh,
last
go
question.
ahead.
And this I ask everybody this one. So, what's one mistake that you've made that you didn't have to make? And I'm not talking about one where it was like, I kind of learned a lesson that was pretty invaluable and I had to learn it the hard way. But something you did that was just stupid. And if you just avoided it, you would have got somewhere faster, or you would have just avoided pain and got to the same place. The reason I ask is that whoever's listening to this, maybe they're building a company, maybe they want to, maybe they're halfway through it, and they can learn from your mistake that was actually just completely avoidable. What is it? What did you do wrong that you didn't
Oh
have to
man,
do?
there's so many of these, but I'm blanking right now. So a mistake that we made that was just like very easy to avoid.
Yeah, like, or maybe like it wasn't easy to avoid, but in hindsight, you're like, man, if I hadn't have done that, it would have been easier to get to where we're at. And like one of the guests has said, I just hired way too many people. Like I just thought I had to hire so many people, and that was it.
Yeah.
Others have said, hey, I didn't have a lawyer, or I didn't sign contracts with my employees and they stole my IP. Like there's a bunch of things that are just dumb mistakes that you wouldn't realize are dumb until you've done business for 6 years as a founder, and you're like, man, what would you think yours
Yeah,
is?
I mean, I think the ones that always kick me is that there have been cases where like we've hired so many amazing people who just like will bust their ass. They do these, I mean, they're like transformative for the business, right? And I wake up, I'm just like, man, I'm so grateful that this person is on my team. And then occasionally you mishire and you have someone who's sort of like doing the opposite, and it's kind of like parasitic on the organization. And but they're people and you just like you want to give them the benefit of the doubt, and you kind of like take them at their word even though they might literally be lying to you. And I think my biggest mistakes are always like not acting fast enough in those situations where
Yeah.
like every time we've pulled the trigger I'm like, man, I should have done that 6 months ago. And then the next time I find myself in that situation I'm like, I really should give this person a chance, like I don't want to penalize them for all these other people who screwed up, and then I'm like, oh shit, I should have done this six
It's in
months
your
ago.
nature. It's
um,
in your nature because you think that if they're working hard, they should deserve the same chance that everybody. And like, have you ever? Okay, I'll just say this: I've never fired somebody and then gone, oh, what a mistake. Like
yes,
every
agreed.
time that I've fired somebody, and I'm not talking like restructuring fires. I'm talking like, hey, I had to fire one employee for
Yeah.
a reason. I'm like, and then half like the other people in the org call me and they go, oh, what a relief. And I'm like, oh my gosh, you guys thought so
Yeah,
too.
yeah. You know what I think
So
it is? I think there are probably some CEOs who are like just like fucking cold-blooded, like
yeah.
they just are like extremely analytical about it. They see this person is not performing and they like rip it right away. And those people are probably much better CEOs than me, right?
Yeah.
But I think it's like it is hard, like it's just hard to be that detached from it, and you want to give people the benefit of the doubt. And so if they say something that is plausible, you are gonna like trust them on it, because
Yep.
it's hard to believe like, oh, this person's just lying to my face.
But
But
turns out sometimes
I
they are actually just
we've
lying.
we've had people who have like multiple jobs who are just like not telling us, people who are
Yeah.
like, I mean, we've had all kinds of crazy stuff that have happened here. And I do think part of it is like we're fully remote. It has a lot of advantages, right? We're able to get like really great people in other states
Yeah.
that like we would never be able to convince to move to New York, and who like if they were able to pick from like every company in New York and San Francisco, we might not be able to retain
Yeah. Get
them.
them to move
So a
here and
lot
then
of
they go
huge
down the street to another company.
yeah. So like a lot of great advantages. One big disadvantage is like it's harder to like really see that, like if someone is like playing you. But I think that's the mistake that the mistake I've made the most times. But
Yeah.
at the end of the day, I think it's like it's okay because it's not ideal, but I think it's okay because like when you get it right, when you get one of those really good hires, the amount of value that one good employee can create is like tremendous. They can really be transformative for the trajectory of the business. And so make the mistakes, fix it as soon as you can, and try to get someone awesome in place afterwards, right?
Yeah,
And
and don't get gun shy. Always hire again. That's like my biggest
right.
lesson that I've learned is that you just even if you think, oh, I overhired or I had to fire this person, I shouldn't have waited so long. You should just hire right away again and try to find that one person or two or three or four, if you're lucky, that are transformative, because that is
Right.
how you really can do it. So, hey, I appreciate the time, B. I got to go to a meeting, and I'm sure you do too. We're running businesses. But hey, thanks for making some time for this. And yeah, thanks for tuning in, guys, to another episode of Let's Talk Logistics.